remember that these types of headlines don't always have to be that market negative. There's that old axiom, you buy in the sound of cannons, you sell in the sound of trumpets, meaning war is not necessarily that bad for stocks. But the reality of it here is we were sitting on top of a 30% gain over the year. Even the time of year it was, the first day of the year that it happened, is a time where money managers and even down to individuals, reflect on risk that they have. And everybody had a lot of stocks. So this is a perfect reminder that stocks don't just go one way. That being said, 3,200 in the S&P seems to be a line in the sand. That's, we went down to about 3,205 on Friday. If we go below that, to me, that'll mean, and a lot of people look at technical analysis and think, well, it's just, voodoo. It's not. What I'm saying here is that the psychology in my mind will be that everyone will be like, oh, gosh, I have too much risk on. It's time to reposition things. And that could turn that into a more significant correction.
So technical analysis is certainly not voodoo, but it is based on history and it is based on statistics. So at this stage as a trader, you look at both history, statistics. What does it tell you about the current setup? Is this an environment where we could see the beginnings of a deeper pullback given the heights that we've seen over the course of the past year?
Without a doubt, and I think we're going to know it relatively quickly today. I came in and I bought back some hedges that I had on that made some money in this move, just because we're right now staying above the 3,200. I'm not sure that's going to continue. And like I said, if it goes below it, then I think it's going to be the beginning of a correction that's going to be about 7 to 8%. I think it could go down all the way to about 30.25 in the S&P, but I think we're going to know it relatively quickly. Like I said, I took some profits today on my hedges, but I have some trades in that it's going to make me more short if we go below those levels.
All right, so it sounds like you're cautious, and rightfully so. We've got developmental headlines here in the Middle East. Does this now there are also opportunities that can happen, and this is not to say that we're profiteering at all, but there have been sharp movements in safety assets, in risk-related assets. Are there places where you believe that there could be opportunities to get into, given the fact that we have this cloud of uncertainty around the Middle East right now?
There's no doubt about it. And remember, I want to stress more that I think this is a hugely negative headline for the world. But as far as markets go, it doesn't have to be. But I'm not trying to belittle it at all. But I have been looking at gold. Gold started to move higher before this happened. When it came above 15.15, I thought it was a buy, and I wrote about that on Twitter. I still think it is. If it can settle above 15.75, 15.80 level, I think the broader, the medium to longer term move is on, and I think it could trade up to about 1,700. And I'm planning on looking at things in that. Now, crude, I'm less positive of crude. I do think it could trade up to the beginning of November highs, between 72 and 75, and that's fine. But the big fundamental story is changing crude. And a Mideast headline isn't as important as it was years ago because now we produce and export, just as much as we import. So it's not quite as big a deal. So I'm going to be looking at gold a little more closely. It's funny to me, by the way, if this was a year and a half ago, we would have been talking about Bitcoin too. Bitcoin has just been too wildly volatile for anyone to really take it serious at this point in time as any sort of, currency proxy or any sort of risk-off asset. So I think that's in its own separate thing now.